Hey there, welcome to Mr. Money Talks. Today, we're diving into a topic that every investor faces at some point. How to make money when there's fear in the market. You know, when the markets go haywire and panic sets in? Well, stick around because I'm going to show you how to turn that fear into opportunity. The market is driven not only by complex processes, but also by investor emotions. An investor without a strategy tends to panic during market downturns, leading to unpredictable and chaotic actions. A frightened, strategyless investor is a boon for experienced and patient ones, as they can profit from impulsive trades. The Chicago Board Options Exchange, CBOE, calculates the Volatility Index, VIX, also known as the Fear Index. The VIX helps gauge investor sentiment, whether they are fearful or confident in the market at any given moment. Expressed as a percentage, the Fear and Greed Index reflects investor expectations for S&P 500 volatility over the next 30 days. What is volatility? Volatility measures how much an asset's price fluctuates. If a stock's price changes rapidly and significantly, it has high volatility. If the price remains relatively stable within a narrow range, it has low volatility. Volatility helps investors assess the risk of individual securities and choose appropriate strategies. A volatile market is ever-changing. Prices during periods of high volatility shift rapidly under the influence of news, global events, and investor sentiment. The VIX index helps measure these sentiments and expectations. How to use the VIX? When the VIX is at low levels, investors are calm. If it begins to rise, it signals growing market panic. The VIX and S&P 500 have an inverse relationship, a phenomenon known as negative correlation in finance. When one index rises, the other falls, and vice versa. Historically, when the fear index reaches its peak, the S&P 500 hits its lowest points. A chart can illustrate the correlation between the S&P 500 and the VIX. During times of fear, the VIX rises, prompting investors to sell securities and pushing prices down, causing the S&P 500 to decline. How to take advantage of investor fear? Nothing lasts forever. Sentiments and trends constantly change, and so do market behaviors. When the VIX is at its lower limits, investors are calm and do not anticipate turmoil. During such times, markets often rise as investors buy more. This can signal a trend reversal and an opportunity for mid-term investors to lock in profits. A VIX value above 30 to 40% indicates investor panic and growing expectations of high volatility. Fear drives the sale of securities, following the law of supply and demand, which lowers market prices. For long-term investors, such moments may present attractive entry points. How to avoid panicking yourself? American financier and investor Peter Lynch once said, "Market downturns are as common as January snow in Colorado. If you're prepared, they won't hurt you." An investor with a clear strategy always knows what to do during market highs and lows. To prepare for a market correction, investors are advised to create a list of securities to lock in profits. These might be tactical or mid-term ideas that have run their course. Make a list of securities to buy during a correction. Understand why each security is on the list. Plan purchase and repurchase price points. Be cautious with margin trading, especially during market downturns. Avoid using leverage during corrections. Long-term investors shouldn't fear market corrections. Think of them as opportunities to purchase securities at attractive prices. Focus on fundamentally strong, promising companies, stick to your strategy, and seize opportunities to enhance your portfolio's profitability. So, there you have it. A few ways to make money when there's fear in the market. Whether you're buying undervalued stocks, trading options, or holding gold, fear can create opportunities if you're smart and strategic. Let me know in the comments. How do you deal with market fear? What strategies do you use to take advantage of it? Don't forget to like this video if you found it helpful, and subscribe for more content like this. Until next time, stay calm, stay smart, and happy investing.